Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, January 25th, 2011. Well, a wild day on Wall Street today. This is what it's all about, folks. We talked about the volatility coming back on Tuesday, and today is Tuesday, and it is back with a vengeance. I love it. 85 million traded already. We should do decent volume today. A lot of the volume was on the selling today, as we saw the markets hit new highs here, then sell off, then bounce, then sell off even more sharply, going to the massive support level. We've been making money hand over fist today, folks. There have been some great trades out there. I'm going to go over a few of them to give you guys a sense of why we sent out the alerts that we did. Why did we call this? Why did we call that? And I'm talking swing trades too. We're not just talking day trades. All right, bottom line is the market opened a little bit lower today as the dollar was stronger. The dollar started to sell off of those highs. The market could not hold up, even in the face of a good consumer confidence number, which popped us up here. Then the markets reversed to the downside, came back to the 200 moving average, double bottom support, bounced, and then broke through. And again, the first alert to buy went off of this 200 moving average, a beautiful pop-up. We went all the way up to the white trend line, hit the double top right here, as you can see from yesterday, and then reversed. So again, there were plays left and right, the levels continuing to work, and this is what we teach in the Research Center. This is what we give plays off of in the Research Center and in the intraday stock chat, as the markets again reversed quickly to the downside. Notice how you came in here, you hit the 200 moving average again, bounced. This time the bounce was only a 1, 2, 3 bar push to the upside inside of the big downward move. That can often be looked at as a bearish pattern. Notice how you got above the 20. The next candle could not confirm the break of the 20 moving average. Even over here, you closed above the 20. You never confirmed above the 20. So 2 times in a row, confirmation signal fails here, which tells you the weakness in the market is there, at least for that time. The markets again start to sell off. This time it's a big time sell off, folks. The market's dropping from basically 129 all the way through this time the 200. Remember that in the money stocks methodology dictates if you go down and hit the 200 a couple times, especially after the first time, the odds are you are going to start to break through that level the next time or the following time. Sure enough, here on the third hit, you can see the 200 moving average gets taken out and blasted through to the downside. The markets continue to sell here. We go right down to my next area. And again, I gave this out in the intraday stock chat as a level to buy. I said 128.30 is your buy level. Sure enough, look at that. It pierces it beautifully. You wait for the pierce, grab it at 128.27. 2 cents, 5 cents off the lows of the day. Bam, go long. And the market reverses to the upside with a massive surge. This time we get above the 200. But you know what? We have not confirmed above the 20. We have not confirmed above the 20 moving average, although we have confirmed above this 200 moving average. The markets go up, hit the 50 moving average up here, they kiss it, and then they start to see a little bit of selling. Now again, folks, I think it's important for us to recognize the keys here. All right, first of all, the selling was going on today when the volume was a little heavier in the morning session. As soon as the volume dried up here around midday, 12 o'clock, the markets were able to reverse back to the upside. In addition, one thing you have to remember, tonight is the State of the Union address by the President. Very unlikely the markets have a big down day today. Very, very unlikely. All right, think about it logically. The Fed's been propping this market up for months now, almost on a daily basis. There's no way, unless there's some disagreement between the president and the Fed, that the Fed would let the market fall. I just don't see it, not ahead of the State of the Union. You can't have the president going on TV tonight with a market that's down 200 points on the Dow. Now, could it be down 75? Could it be down 50? Yeah, that doesn't matter. No one cares about 50 points on the Dow, 75 points. I just don't really see it above 100. That would be an absolute shock to me if we saw down over 100, especially if it was down 200. It's just not going to happen. All right, so again, it should not be a surprise to anyone to see this massive bounce back. I even think we bounce back higher by the end of the day, even though you could come down here to the 200 before all is said and done, and then maybe bounce after that. You have to figure late day propping could come in today because of that factor. In addition, tomorrow the Federal Reserve will release their policy statement on interest rates. Interest rates won't move, but again, it's all about what the Fed says. What do they say on inflation? What do they say on growth? What do they say on future possibilities of interest rates? What about QE3? Is there any sign of QE3 after QE2? These are all factors that the market will be looking at very, very closely. If the dollar goes down on that, expect the markets to go up. That's just the way it works. Inverse to the dollar is the name of the game right now and has continued to be the name of the game for really a couple years now, if not more. Okay, so that's your intraday action. Again, good buy here, good short up here, good buy down here, and again, the market's going up to the 50 moving average, and that's a little bit of a short right there. Those are just your spiders trades. Let's talk about some other plays here. BPT. This one was a great one, folks. Again, what a sell-off on BP Prudhoe Bay here. a trust, a huge drop here. This thing was down, I think, something like $17, $18 at the lows. The key was on the, and I put this on the Rant and Rave blog actually as well for people to look for. If you go to your daily chart, look at that. Goes right down to the 200, pierces that I gave the 101 level on the Research Center post, and again, or excuse me, on the Rant and Rave blog post just to look for. It's a very high risk play, but look at how perfect it was. It goes to 100 spot 76. I gave the alert, and you can see it on the Rant and Rave blog if you go look at it at a 101. That was 24 cents off the lows of the day. This thing has now bounced from 101 all the way back to 108 and change, a $7 bounce. What a trade there. I mean, huge money we're talking about here. I mean, just imagine buying just 300 or 500 shares of that at 101 and getting $5 out of it. I mean, just $5 even, not even the full 8 that or 7 that it bounced, but a $5 move. I mean, the money is there for the taking. All right, other key trades, folks. Again, I've been talking about these trades in the Research Center for quite some time, and again, today it was a beautiful call. The GLD, I said buy gold if it gets inside of this level. Today, at the lows of the day, it got there. The buy trigger was announced via the Pro Trader watch list bullish side, and again, already you've bounced 70 cents on the GLD, just the beginning. But again, it's not going to be a huge bounce, but a 70-cent bounce is just an intraday bounce on the swing trade so far. It's a beautiful play. Gotta love it. Other alerts given out, ABX. This was a no-brainer, folks. And again, off the lows of the day here. And this was actually posted on the blog as well. ABX looked for a long. It bounced all the way back here. And even some other trades. I even gave out another trade via the Research Center in AUY, which all our members should be in at the 1090 level. 1090 right down here. Why? Because it's the 200 moving average. And again, look at the sell to the 200 moving average. Look at the bounce already on this thing. And again, the Research Center members already nicely in the profit zone with a break-even stop. Good job to them. And again, we'll continue to feed the alerts to the Research Center members. They continue to make the money. That's fine by us. And again, that's what it's all about. Educating, profits, swing trades, and understanding the markets, the real markets, not the BS, not the hype, not the nonsense that the media spews out there. We tell it like it is, nonsense regardless. I mean, it's just there. It's for the taking. All right. Let's go over a couple other trades here. Let's take a look at the intraday dollar. The dollar, again, you can see this big sell-off in the dollar, then the big pop in the dollar, which pushed the markets down. Then the dollar fell back down, and that's why the markets have come back off their lows. It's almost tiring today to be watching a market that's this active, but it's a great market. I would never have anything different because the trades are there. The money just gets multiplied out in profits terms. Okay, and again, I encourage you to all join the Research Center. Take the free trial if you want to test it out. That's fine. You know, there's a free trial there, free trial to the chat room. See if you like it. You'll love it. All right, you'll be making money hand over fist for this free trial, and then again, just continue on based off of that in the Research Center going forward. All right, dollar again, flattish on the day, slightly higher, but overall flat, which makes sense. If the dollar's slightly higher to flat, markets are probably slightly lower to flat, which is exactly where they are. GLD we talked about. The USO is getting hit again today, down 61 cents. Take a look here. You are moving towards the 200 moving average, although you have pierced this lower support level. So right now, again, I'm probably looking for the 200 moving average. I'd love to see that hit. That would be a little bit of a long trigger. On an intraday basis, oil gap down and has gone sideways to lower most of the day. And again, we are seeing a nice little sell-off in oil over the last week or so, which is good to see because oil had been toppy for quite some time. You want to see that come in. American Express had earnings. AXP had earnings, guys, yesterday. The earnings were okay, but they have a lot of regulatory issues. And at this point in this market that's this high, earnings have to be spectacular. We've seen many stocks that had great earnings still sell off because they're just that highly priced. American Express was okay. Again, the stock's selling because they just weren't good enough to keep the stock price up. Okay, Texas Instruments also, we'll take a look here. You can see that stock is getting hit a little bit to the downside as well. Nice little sell on Texas Instruments today, down about 50 cents. All right, folks, bottom line is the money's there to be made. The question is, are you making it? Join the Research Center, join the Intraday Stock Chat. Enjoy. Let's profit together. Take care.